That's a quick one on that one.
Yeah, definitely it's a struggle for us to go out and sell our product when you have, every country has a different view of what a number one lentil is, a number two lentil is, a number three lentil is. And probably in the U.S., we may suffer the worst because our grading system probably isn't exact as a Canadian, and the world kind of looks at a Canadian standard and compares us to it, whereas we make no comment for wrinkle whatsoever, and you can still grade number one with a high amount of wrinkle to it. So it's difficult to go out around the world and market this product and be compared, with this standard, that standard, and our standard. And all of our exporting countries have very good trade associations, and I would certainly recommend that these trade associations get together as a beginning, get these trade associations together and get them to somehow pressure the inspection agencies in their respective countries to try to standardize so that damage levels are the same for grade 1s, grade 2s, grade 3s, so on and so forth. Color levels are the same throughout, so everybody in the world has a better understanding of what is the quality standard.
Mahmood? Yeah, quality is a big concern here. We do agree that as a splitter, we require a good quality product for the end user, for us to give the end user again a good quality split product. So that's a big concern. In fact, as I said before, the 2010-2011 crop, we had big issues, but lately what we've been receiving is the quality have been quite good. There was no issues in it.
Will, how do you think Australia does on this side?
Yeah, well, I think our standards are pretty good. They've been set for a while and they don't change, and we've never really had any problems with them because as long as you're buying what you think you're buying and the receiver, the bulk handler, has done his job in receiving it the correct way, then we don't really have an issue with it. And every year we'll have a meeting pre-harvest. If there is an upcoming quality issue with a weather situation, then they'll adjust and they'll open a new grade for whatever that is. So yeah, no, I think out of Australia it works pretty well for us.
Just from a Canadian perspective, I think it's important for the importers to know that I have been appointed to the Western Standard Subcommittee for Pulses for the Canadian Grain Commission. So I've agreed to serve on that committee for, I think, 5-year term. And one of the issues that we will be addressing is the grading standards on red lentils, and that we will be looking at the introduction of quantitative standards related to wrinkle and damage. The process in Canada, for those of you to understand, is not something to just decide a change. There has to be grower consultation. There is a process that has to be followed, and the target for a standard change, if it is recommended, would be 2013 crop. So this will take about 1 full season to get to that point. So we all pray for good weather, and we'll continue to work diligently on that. A final wrap-up side. I think what we're going to do is Sudhakar pinned everybody to a $50 range on the chickpeas, and that's a wide range because chickpeas is a high value. So I'm going to pin you to a $5 range. No, I'm not. I'm just kidding with you. We've talked about all the factors. Will, you're going to start just because I like you so much, We talked about all the factors: currencies, liquidity of our importers. We've talked about supplies. We've talked about governmental policy, all in a very short period of time. What do you think in terms of price outlook for the next, say, 90 days, and where do you see New Crop Australian potentially having a chance to open?
Well, the next 90 days is really from what Mr. Mahmood said about the Indian weather. I mean, that's crucial, so we need to see how that pans out. But from what I'm feeling in the market now, current values, we're trading 565, 575 US. I'd expect that in the next 90 days to go over 600. Would be my, who knows, maybe up 625, something like that. You've got Ramadan coming, you've got, there'll be some more demand, the prices are good, I think there'll be more buying and there'll be more. The grower in Australia is not a seller lower than this, so there's very limited downside at this point. Unless something massive happens with the Australian dollar. If that drops, then that would have a big impact, obviously, on the price. But I'd expect it to go up in the next couple of months. Long term, again, very hard to say. There's too many things to happen in the next few months. You've got India's crop, you've got Turkey's crop, you've got Canada's crop, you've got our crop. So by the time it gets to us, if I was going to take a punt, I'd say that the price is, there is a lot of supply, there'll be more supply coming. I don't really see it going much higher than that. So 625 would probably be around my number for new crop as well at this point.
Okay. Jeff, where does it have to be competitive in the U.S.?
To be competitive in the U.S., you know, and we're not a huge red lentil grower, but we've got to be at least 675 to 700, okay?
On the greens?
On the reds.
On the reds, yeah,
On
okay.
the green lentils, a number 1, number 2 red lentil has got to be trading in the 700 to 750 range to be overly attractive to farmers. That being said, in my opinion, I think over the next 90 to 120 days, I kind of think that green lentils probably come down, continue to come down. I think they have to come down in order for us to get rid of it and get into some markets at this point.
And especially the off-grade.
Especially the off-grade, definitely. And it just, to me, it feels like red lentils are sideways for 90 to 120 days at this point in time. But I would expect this fall to be in the 650 to 675 range on red lentils.
Mahmood, any ideas?
I agree to Will, because all depends on the Indian crop.
Yep.
And in fact, you know, if Indian crop is really short by 50%, right, then I feel there's going to be a big jump in the market. But
Yep.
my opinion is that between 625 and 650 within the next 2-3 months.
From a Canadian perspective, I think we said, you know, certainly ample stocks on the red and green side. We're seeing the green lentil side soften. It was very high. I mean, the spread had come up to, on a number 2 or better basis, we were over $200 a ton spread between red and green. And so that was a very significant spread. That spread has now, you know, come closer together. Red has come up a bit, green has come down. We see that, you know, continuing with pressure on the green lentil side. The green lentil side, in terms of the market overall, there's pressure as a result of Middle Eastern disruption, you know, related to green lentil consumption in the region, Iran in particular, with liquidity issues and sanctions-related complications. So that market seems to be, you know, sideways now. It's come down, and we expect that trend to continue. On the red side, you know, the bottom line is we've already said 20% reduction in acres. You know, we think that growers have very significant staying power. You know, the red lentils were good quality. They are intending to plant less. They will store. They will carry to the next crop. They will only let them go if they get a price that they feel is workable. And we've saw the Canadian market, I think we've jumped up maybe $25 over the last 7 to 10 days. And we expect with a combination of the Canadian dollar strength, which strengthened again a little bit yesterday, and grower resistance to grower pricing, we're expecting the market to firm up. And I would agree with that range of 625 to 650.
Murad, one thing that I would add to it, being from the grain side of things as well, from a grain company, we get to see a little bit of what producers' thoughts are there. And I think you hit the nail on the head right there, is that the Canadian farmer, everything we've been hearing about him so far is he's selling wheat, he's selling durum at a pretty heavy clip for new crop already. And definitely Montana, North Dakota, Canadian farmers are well heeled at this point in time. So there is no cash flow needs for them. So I would definitely agree with you that they're probably going to be storing lentils and cash flowing with wheat for what they do need.
Yeah, I mean, wheat and oil seeds are moving, and the prices are very attractive. I think another thing to recognize for North Dakota, Montana, and Western Canada, we estimate we have about 1.5 years of total production silos on farms. So you have to recognize there is no pressure with storage, there is no pressure with cash flow, and you have very wealthy, sophisticated, and informed growers. So as a result of that, throw in a little bit of dry condition and throw in the potential problems in India, you have a market that, you know, certainly I think we've seen the bottom and we're on the way back up.
Actually, in Montana, it's 2.5 years.
2.5 years.
Storage, so.
So I think we're going to wrap up there, and we're going to go to questions from the audience and comments, and then we'll wrap up. We have a microphone out there?
Yeah. Murad, my question is to you and Mahmoud. what's your view on a price discovery mechanism by means of a forward futures contract on lentils in terms of standardization of the quality as well, and the impact on the industry? What's your personal view? And I would like to hear from Mahmoud the same.
Mahmoud is asking me to go first, and as he's our friend, I will go first, I guess. I mean, Hakan, listen, as you know, from our company perspective, so not from the Canadian industry perspective, but from our company perspective, the quality standardization is a very important, end game here. And, there is, competing forces in the market where when we look at it, there is a, section of the industry that is moving in to non-commercially clean bulk shipments, that are coming into markets that, have issues around, potential pests of concern, other issues. There's a processing sector that is very much focused on value-added production, standardization of quality, segregation of qualities, and creation of markets and value for importers and exporters. So this is a competing view, and it happens in every crop. So this is a normal thing. And in terms of a price discovery mechanism, as you know, my view is very clear. The issue we have is the market price discovery and hedging mechanisms are only effective if they have liquidity, if they have depth, and if they are not used as a speculative means to basically create paper profits, and if they are there to facilitate the orderly and managed flow of physical goods, then this is a different story. The problem we have in pulses is we have a lot of gamblers in the world who should visit Las Vegas, not visit the speculative market. So that's my perspective. Mahmoud.
I think Mr. Murad has answered all your questions, Hakan. So I don't have anything to answer.
But Hakan, let me make one other comment. We want more orderly industry. The volatility in this industry, period, we shouldn't fool ourselves into thinking we are a healthy industry in the world. We are not healthy. Healthy means that every link in the chain is profitable, and this industry is not healthy today. So, from that perspective, I think everything needs to be looked at. I think that's where I'll leave. Any follow-up, Mr. President?
I would like to...
I was actually talking about the other Mr. President, but... No, I'm just kidding, Ravi. Go ahead, please.
No, Murad, I take your point that the futures markets you feel can distort the physical markets, but as long as liquidity is available, as long as there is depth in the market, and as long as that there is a physical delivery mechanism where there is a delivery, a standardized commodity is deliverable at a particular spot, I think the futures market are a great tool and not Las Vegas, as a lot of people think. This I say, Murad, not directly in disagreement with you, but from the fact that I am experiencing and I do trade the futures markets in India on various commodities, and I think they are a great tool to have. They are a great risk mitigation tool. They are a great tool of an early warning, I would call them a radar, an early warning system where you can get price signals well in advance, which give you an opportunity to either buy or sell. And I mean, it's a great, it's just considering myself to be an importer, I buy Australian chickpeas, there is a calculation and I sell the futures and I play the premiums, and that reduces my risk to a very, very large extent. So futures exchanges for a commodity like pulses, where there is an annualized production of about 60, 70 million.
And liquidity in the lentil futures. So, Hakan, if you're asking a question on a general sense, I think we should put a session at Cecil's. You can talk about it there. But on the lentil side, I maintain my position. Praveen, we're saying the same thing.
Correct.
My Las Vegas analogy is in a situation where there is no depth and liquidity.
and probably it will help create profit within the supply chain, the futures markets. So,
Right.
point taken, Murad.
Okay.
And in fact, going one step ahead, I would even suggest a pulses index, which is a group of largely traded pulses is giving weightage within an index, and I think that would